Be Wealthy and Smart, episode 1147.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about international venture capitalists who are investing more in blockchain ventures. Now, I like to point out things that don't always appear obvious, especially when the media is saying one thing and the reality that's happening is another. And that's exactly what we have right now. After the big FTX debacle last year, when the exchange went down and massive fraud was found, the reality was it was another Bernie Madoff situation where there was fraud from the get-go. And it didn't mean that the whole industry was a scam or that everything with blockchain was bad or invalid. The truth is much different than that, and that's what I want to share with you today. Because the media presented the FTX debacle as if all digital asset technology was somehow a scam and tainted and not real. It made it sound like it was all bad, and nothing could be further from the truth. We have a real trend underway, which is the digitization of money. Money being able to send over the internet and the tokenization of assets worldwide. And this is a real undertaking that is going to happen over the next few decades. We are very early in that process right now. So the media painting all this technology as somehow a scam or bad is just wrong. But it's not the first time that they've been wrong. And I documented that in my book, 3 Steps to Quantum Wealth. And I want to share that with you. So I'm going to read you a little bit from 3 Steps to Quantum Wealth. This is from page 34. And it says, financial media is often wrong. Don't expect to hear about great investing opportunities in the financial news media. They may not get investing trends or cycles correct. Back at the peak of the technology boom around year 2000, the media said internet companies had no value and no earnings, and that it was foolish to invest in them. They also said the internet was overpromising, under-delivering, a fad, and would be rejected. There was nothing to see here. Move on. This is why you cannot rely on the media, and you must do your own investing research or rely on your wealth mentor. For example, in December 2000, during the internet stock frenzy, a ridiculously negative article in the Daily Mail reported, "The internet may be only a passing fad for many users. According to a report, researchers found that millions were turning their back on the World Wide Web, frustrated by its limitations and unwilling to pay high access charges. They said that email, far from replacing other forms of communication, is adding to an overload of information. Experts from the Virtual Society, which published the report, said predictions that the internet would revolutionize the way society works have proved wildly inaccurate. Many teenagers are using the internet less now than previously, they conclude, and the future of online shopping is limited." Steve Woodgar, director of the Society, said, "We are often presented with a picture of burgeoning internet use, but there is evidence already of drop-off and saturation among users. Teenagers' use of the internet has declined. They were energized by what you can do on the net, but they have been through all that and then realized there is more to life in the real world and gone back to it." How laughable is that now that we know what the internet is and what it's done for shaping businesses and media and shopping and financial services? Did millions of people turn their back on the web like they said? No. Did people refuse to pay for more access? No. Was the future of online shopping limited? No. Were teenagers so bored that they abandoned the internet? No. And that's why I've said if you rely on the media to help pick your investments, you would probably have missed some of the best investments in our lifetime. And I think we're right at the point where that's about to happen again, potentially. If you've been following me for any length of time, you know I talk about Ripple Labs, which is the company that has the XRP ledger and the cryptocurrency XRP. Right now, Ripple is involved in a lawsuit with the SEC because they claim that Ripple Labs has been acting as a security and not as a cryptocurrency, or not as what I think it is, a currency. But what we've been hearing from the CEO of Ripple, Brad Garlinghouse, is that Ripple has gained massive market share outside of the United States as other countries have clarity with their crypto laws. And every single other country besides the United States has already determined that XRP is not a security and is a currency. Now, why I bring this up is because there was an article that I want to share with you about how international venture capitalists, specifically those from the Middle East and North Africa, it's called MENA, M-E-N-A, Middle East, North Africa, how these venture capitalists have been loading up on blockchain investments. And my point with this, and why I want to share this article with you, is simply to reiterate that this FTX debacle is an isolated event, and we shouldn't let it cast a wide net over all cryptocurrency or all blockchain, because it has nothing to do with it. It's a completely different situation. Now, why the Middle East and North Africa is so interesting is because they typically have large pools of money that are sovereign wealth funds. Sovereign wealth funds are state-owned investments that act as a stabilizer to diversify the country's money by investing in other areas. They are seen as very savvy investors. So in this article I'm going to share with you, it talks about these venture capitalists in the Middle East and North Africa and why they are increasing their investments in blockchain technology. So let's take a look at that. This is from Cryptopolitan. And it said, according to the report MENA Investor Survey of 2022-2023, 50% of all 83 fund managers and venture capitalists surveyed are already planning to increase their investments in blockchain infrastructure, metaverse projects, and decentralized finance in 2023. This is a testament to blockchain technology's prevalence, inspiring investors worldwide. It goes on to say, despite the global economic downturn in 2022, investment capital used to support the cryptosphere significantly exceeded that of 2021. According to reports, about $36.1 billion was raised in 2022 compared to only $30.3 billion in 2021. So about a 20% increase over 2021's investments. Additionally, the MENA region saw a considerable investment in cryptocurrency and blockchain companies in 2022. For instance, Rain Cryptocurrency Exchange was funded with $110 million from MENA investors, while BitOasis procured $30 million from the United Arab Emirates-based Wanda Capital and other entities. And 19% of venture capitalists have spent more than 50% of their funds on blockchain entities. Now, venture capitalists are known as very savvy investors. They look for trends and invest ahead of the curve, and they're buying private businesses that they can invest in at very low prices and then make a big profit when they become a publicly traded company or they get bought out by somebody else. But either way, they buy them early, they buy them at a low price, hoping to make massive profits. And they often do, although it is a high-risk business, and some of those businesses aren't going to survive. But the ones that do can be huge home runs for them. The study also revealed 33% of venture capitalists had invested between 5 to 15% of their capital in crypto, while 27% had put 1 to 5% of their investments in crypto. And it says, even though the crypto market witnessed a downtrend in 2022, 51% of those surveyed responded that they would commit additional resources to blockchain and cryptocurrency companies in 2023. So again, over half responded that they would commit additional investment resources to blockchain and cryptocurrency companies. There's a company called Nickel Digital Asset Management, which reported that by 2023, United Arab Emirate investors intend to build up their cryptocurrency investments dramatically, such as with a $100 million venture capital fund specifically geared toward Web 3.0 and blockchain-related assets. It went on to say, despite the chaos of 2022, 54% of survey participants responded that they invested in cryptocurrency and blockchain entities because these technologies are projected to shape our future, while 42% believed it was due to their potential to resolve several issues we encounter today. So basically what that's telling us is that these Middle Eastern investors, venture capitalists, sovereign wealth funds have not wavered in their appetite for these investments, and that they really see that these technologies, Web 3.0 and blockchain, cryptocurrencies, are the future, and that they solve real business problems. And those are the ones that I like to focus on, are the ones that solve real problems, that can reduce expenses, increase the speed of transactions, and work correctly every single time. That's why companies like Ripple, that have XRP, that works in cross-border payments, is such a huge advancement from our current banking system, which can take days to send money, is very expensive in terms of fees, and has over a 5% error rate, which is a very high rate of error. But mainly I wanted to share this article with you just to show you that A, savvy investors are still investing very heavily in blockchain and cryptocurrencies that have utility. B, some countries outside the US might be more successful right now because they have clarity of their laws, whereas the US has been holding back giving that clarity and determining what is a security and what is a currency. Other countries have already made those determinations. And 3, we can look to those other countries because they do have that clarity, and we can see where are the savvy investors investing. And I hope that helps you to see that FTX was a terrible situation that many institutions got caught up in. However, that shouldn't tarnish the blockchain or Web 3.0 or the potential that we have going on with this new technology trend that is underway in the quantum age. Because we're going to see massive shifts in movement of money and assets as they're tokenized and put onto the internet, just as we saw information put onto the internet over 2 decades ago. That changed our world then. This is going to change our world going forward in ways that we can't even imagine yet. And if you've done your homework and you know where to invest, putting up to 5% in your portfolio might be a smart move for you if it coincides with your risk tolerance. And if you have a time horizon of 3 to 5 years for this to work its way through and to play itself out, I think you can make some spectacular investments that will further you toward your goal of financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.